Hello, welcome to the Forbes India show. 25 years ago, two young men founded a small brokerage firm in Mumbai with very little money and a big heap of dreams. Today, that brokerage firm has become one of India's largest homegrown, fully diversified financial services company. I'm talking about Motilal Oswal Financial Services, and the two men here before me are Raamdeo Agrawal and Motilal Oswal. Gentlemen, thank you so much for joining us. So 25 years has been quite a journey. 25 years, you've seen various business cycles. You must have seen a lot of hope, a lot of despair. Where would you put where we are today on a scale of either hope or despair?
You know, one of the things I have seen in the stock market, and particularly for the economy underlying, is that every 7 years you have one cycle. This 7-year cycle, at least for Indian markets, I think it is again going to happen.
Okay.
The next appointed date for the boom is 14-15. So
you're not worried by, are we overdoing the pessimism? Do you think we're overdoing the pessimism?
Yeah, for sure. For sure, but it's a cycle. I mean, when there is a pessimism, people talk about pessimism. When there is a bull run, 2 years back, you see the headlines. We were talking about double-digit growth and the same prime
minister. Here we're talking about double deficits.
Now we're talking about
policy paralysis. You don't think?
No. It's all there. I'm not saying that there is no policy paralysis or there's no problem. There are problems, but it's a process. Once the problem comes, you start highlighting them. The guys who are responsible, they start taking steps. They are also cornered. They cannot say that we don't want to do anything.
Are you as optimistic, Mr. Oswal?
No, I think I'm a born optimistic always, and I think
and that's the last 4 years hasn't ground that optimism down.
No, as Raamdeo said, that we have seen those kind of cycles, and we have to accept the fact that financial services and even Indian economic cycles really, I think, will happen over the period of time, and we are actually geared for all good time and bad time.
So Raamdeo, you're eternal optimist. So you don't see that. So the twin deficits, the policy paralysis, the India story still holds good for you.
Yeah, India's story is much bigger than this twin deficits and all. These are problems of 1 quarter, 2 quarters, 4 quarters, and very, very manageable problems. And the people who are raising the objection about the problems, they themselves are saying that it's something which cannot be sorted out.
Okay. It's something that can be sorted out.
Yeah, it can be. See, so long as you have $300 billion sitting in kitty, you can think a lot. Everything is possible. But if you are out, like in '92, you had only 7 days import cover. Now, nobody can give you import cover. Nobody can give you forex. That's not the situation this time.
We've had a 5.3% number recently. A monsoon that's looking like it may not be the best that we've had in many years. So we are looking at perhaps a sub 6 early days, but we could look at a sub 6% growth.
It could be 2%. It could be 3% for a year. How does it matter? It doesn't come to an end.
Okay. What's the worry? We could go back to the 90s where you had inflation growing faster than growth. And that puts a whole different spin on the mood, on savings, on everything. And
see, we are unnecessarily, trying to visualize a lot of draconian days.
The worst case scenario.
Yeah, worst case. Anything. See, nothing is zero probability event.
Okay.
Okay, but I don't think things are completely broken down. You look at even May, cement sales is grown by cement dispatches are up by 13%. You can't dump cement somewhere. It's a perishable commodity. So obviously some construction is happening somewhere. 13% is large number. I don't think, probably in China, nowhere in the world, on this size of cement, India is the second largest cement consumption country in the world. So when you do 13% more construction is happening, which is a very healthy sign. You look at your car sales. Car sales is up by 3% year-on-year basis, despite all the fuel problem, your diesel engine problem, petrol engine problem. So if you could get enough diesel engines, probably your sales would have been growing at 8-10%. Motorcycle is up 12%. Corporate profits are 28% quarter-on-quarter up. Still we have this 1% IIP declared by the guys. Government revenue is up by 17%. So which one to believe? Yes, we need to do certain things, and which authorities will do, and they are taking proactive actions. And some of them are political, some of them are clear, sloppy kind of implementation or whatever. But it's not broken down to a level where we must lose hope.
Well, what's the retail investors telling you? Because you've got your pulse on a huge number of retail investors. What are they telling you? Or what are the messages you're getting from them?
No, I think there's a lot of pessimism among the retail investors because, see, market on 4.5 year basis has really, I think, not really moved up at all. In fact, really it's down by 15-18%. So, and retail is nothing but really, if I have made money yesterday, then definitely I'm going to really come tomorrow.
Okay.
And very less delivery kind of, I think, volumes are happening today.
Is there an increasing shift to bonds and debt over equity? or at least
See,
thinking that
volume, some volume keep on, I think, shuffling between equity, commodities, and maybe currencies. But still, I would say currency and commodities are still very small market compared to the equities. The moment you see some kind of stability, and maybe some hope now, people are going to come back.
Okay. So, Oswal, you started off as a retail broking business. You've largely stayed retail focused. Just take us through the thinking behind that strategy.
I think we started a retail business, so we understood that business, and the way we built the business as a small sub-broker, then a broker. So I think the whole focus was on really adding value to the customers. And since Raamdeo had a very good background on research, so the whole value proposition that time it was built around how do we add value through research and through advice. And that simple philosophy of, I think, solid research, solid advice, we have been practicing over a period of time. Although customers have become, I think, maybe from investors to traders over a period of time, but the need is there for really the honest advice, for the right advice, and I think the good kind of recommendations on the stock side. So we really built around our own strengths, and then we kept on expanding through our own distribution. I think one of the early insights, since we started as a broker, so we had the insight that why not really, I think, if we can really build the business, why don't we, I think, create huge amount of sub-brokers across the country.
Through the franchise model.
Through the franchise model. So, and India as a country has got huge entrepreneurial kind of, I think, talent. So we built on that, and we kept on expanding from all big cities to smaller cities, and I think we have been able to create a very good distribution through which not only we can now we are pushing the equity products, but maybe mutual funds and maybe other wealth products.
One question I only want to ask both of you, and so let me take this chance now. It's Motilal Oswal. Both of you founded the company together. Why is it not Motilal Oswal Agrawal? How did the name and stick, and how is Raamdeo okay with this?
Yeah, so I'll tell you this.
All right, tell me.
You know, till about 95, you couldn't become partner officially in broking business unless you're a blood relation.
Okay.
Okay, and yet we were not blood relations, we were damn good friends. And we knew that we cannot do it without two together, and we didn't have anybody helping us. So, we said I'll be consultant and it will be carried in his name, because again the experience was counted by the guys who was going in the ring.
Okay.
Who was carrying the badge.
Right.
So he was the guy who was carrying the badge. So experience officially was counted in his name. So obviously you had to start the firm in his name.
Okay.
Later on, when we corporatized, we had an opportunity to say whether to forget about Motilal Oswal and create a India broking house or something independent, So that time we said that all the empanelment is in the name of Motilal Oswal. Restarting that process and again going for empanelment will be again a tough call. So we again took a call that, okay, let's continue. How does it matter? Starting Raamdeo Agrawal doesn't make sense.
Okay.
So let it be continue. I don't have any problem in seeing Motilal Oswal banner out there so long as it works for the business.
Okay.
And that's how it continued. And then we realized that world over it is the names. Morgan Stanley is the name of person, or Merrill Lynch is somebody's name,
okay.
So it just goes on.
Okay. Okay, we take a break at that point in time, and we'll come back and continue the discussion with the founders of Motilal Oswal Financial Services, a company that's now 25 years old, started 25 years ago as really a hole in the wall with these two gentlemen and perhaps one peon. We'll come back after this very short break. Stay right there. Welcome back. We're talking to Mr. Raamdeo Agrawal and Mr. Motilal Oswal, the founders of the Motilal Oswal Financial Services Company, a company that was founded about 25 years ago and today one of India's largest homegrown diversified financial services companies. Raamdeo, we were talking about how you differentiated yourself in the beginning. As a broker, you offered research, you were able to, basically your research differentiated you from your competition. Today the competition is very, very different. And you're also now, as I said, a diversified financial services company. What's to prevent it from again becoming just another diversified financial services company? Just so all it's doing is competing on margin, competing on fees.
See, we started off in '87. So we said, what do we stand for? We said we understand the stock market. So we said we will help clients create wealth in the stock market. That was a promise. And if I help successfully the client will take care of me.
Okay.
No, he will come back and he'll take care of my needs, and he'll remunerate me. That was the whole this thing. Even today, the promise is same. We want to do something which is to do with the stock market, because that is one machine which we understand, and that's where I think differentiation lies. This is the biggest game in the town, 1.5 lakh crores per day, and we think there is enough scope for various services related to whether it is IB, whether it is institutional equities, whether it is retail equities, private equity, public equity. I mean, those are the things which we are doing. And everything has either starting or end in the stock market. One leg is definitely there in the stock market. So we think the wealth of the nation is increasing. You need not one Motilal Oswal, you need 25, 30, 40 of them to cater to the entire nation. And as the demand for services are growing from even foreign nationals who are coming into the country, you need more sophisticated services and more services of investor related services. So of course the delivery channels will change, the requirements, sophistication will change, the skills required within the company to cater to them will change, technology delivery channels are changing, so online competence has to come. So a lot of those things will change. Basically making money in the stock market would remain broadly same.
Okay. So you're not tempted then to get into the larger financial services market. I'm talking about banking, because a lot of people feel that whenever there's a downturn in the stock market, when regulation goes against you, they forget about the 30% saving that India does and want to go into another related business.
No, I think for next couple of years we are very clear that we want to build our existing franchise. Whatever businesses we have now 6 verticals within financial services, so we want to really, I think, make them much bigger and much better. And we see there's a huge amount of opportunity, and there's, I think, huge amount of focus is required on those businesses. So right now, I think the 6 businesses what Raamdeo has mentioned, we just want to really, I think, build it up, I think, on a certain scale, and then we'll see where exactly we can leverage upon our existing strengths. Because each business is linked with another. So wherever we had existing strengths in terms of research or in terms of market kind of, I think, understanding, or in terms of corporate relationships, or maybe distribution or brand, we have just tried to leverage upon the existing strengths and then build the new franchises around that.
But what are the temptation? Because when a lot of people look at Indian companies and say, why are you conglomerates? Because you want to go grab businesses in very diversified areas, and the answer is because we are still a small country and the opportunities are so large.
Sure.
So aren't you tempted at times to get quickly into insurance, quickly into something else?
No, I think whatever we want to do, I think we want to do the best. We don't want to be the biggest in a hurry. So I think that the focus is very clear that let's at least create a niche kind of, I think, positioning in whatever segment we are. And then really, I think, slowly and gradually build it up, rather than really, I think, looking left and right and try to create many more businesses. So that's not our DNA.
One is that we are not doing fund-based business. You got to have DNA also.
That's
to
right,
do things which is NBFC, bank, insurance. There are large business opportunities. Not that it is not open to us. It is clearly we can try hard and get into one of them.
Well, you got a brand. Raising the funds is not going to be a problem. Raising a partner is not going to be a problem.
Yeah, so that's possible. We have right kind of brand equity also for some of the businesses. But I think, see, what drives us, what we love to do. Like asset management business, that's very challenging. One of the most difficult business to get in, and 35th AMC, I think it just doesn't make sense. It is better to have a 10th bank private license rather than having a AMC. But that's what drives us. So we will build. I mean, we have built 2-3 businesses. Here also we are building up. So it's a difficult process, but we'll definitely build private equity and public equity. So our energy is going into what we love, so that there is no stress.
Okay. Who do you model yourself on? I mean, when you started, did you model yourself on, when you both came to Bombay as youngsters and rode in that, I believe, that the motorcycle that you had, who did you think you wanted to be? Who were you modeling yourself on, or were you just saying we're getting in and there's an opportunity here?
So at that time, you just wanted to make money. I mean, in the sense that we knew only one trick, that was stock market.
Okay.
And we thought that without having money to make money, the best place to go is stock market.
Okay.
Then later on, we realized that you can make a lot of money. I mean, initially to justify that, are you making a lakh or two? That was the game. And then later on, you realize that you can make crores. And then you started knowing that there are such large firms like Morgan Stanley, Goldman Sachs, Bear Stearns, and then corporate entity. And I mean, then the future starts unfolding as you meet larger and larger success. So now ambition is to one of the larger services, financial services firm catering to all the corporates, and be one of those, large corporates like all these big bulge, kind of Wall Street firms. They are among the top 50 or top 100 S&P Fortune 500 companies in US. But we are, Indian financial services firms are nowhere close to that right now. So in next 5, 10, 15 years, we aspire to be.
So you don't need a banking license to do that. You think there are enough opportunities outside of that too?
No, I think opportunities are huge, and look at the kind of, I think, overall size of the markets, like still equity, less than 2% of the people still, I would say, have access to the secondary market or primary market, or maybe about 3% of the people, they might be investing in, say, insurance, or maybe 10% of the people, they may be buying insurance. So I think headroom is huge for us to really focus on and build size in those businesses where we see enough opportunities and we have at least a lot of experience.
Interesting. Only 2 to 3% of Indians invest in equity markets. Our saving is huge. 30% of GDP. Of course, a large part of that is government saving or dissaving. It is both an opportunity and a bit of a worry, isn't it? Because opportunity is because only 2%. The worry is why only 2%? Is there something structurally wrong? So, what is your take on that?
Yeah, see, one of the things is that equity investing is somewhat intelligent, in the sense that it's not for everybody. So, like people in the villages, farmers, uneducated people don't have, I mean, only 30% of the people have bank accounts. So 60%, 70% of the savings, I mean, people's savings are not reaching the bank account. So forget about reaching the stock market. So there are a lot of challenges, and my sense is that environment will become much more conducive. Second is that fixed income is getting you 10% without applying your brains. So why should you take so much of volatility and multiple years of non-performance? Because in equity markets, performance comes at its own peaceful time. You know, it takes, I mean, 3 years there won't be any performance. Actually, it will go down, and then 4 years it will just go like a bull run. So the money comes during those 4 years only, after seeing the performance coming in. You know, so I think the same trip will keep happening. At some point of time, I hope we also see low single-digit interest rates. I mean, it should happen in my lifetime. And at that point of time, you see the huge shift from, you know, fixed income securities to buying businesses in India. But how far it is away, when will it happen, we don't know. And at that point of time, I'm quite sure per capita income will be very high. Penetration will rise because 3, 4, 5% on fixed deposit would not be acceptable rate of return. And at that level, capital productivity on the corporate side will be very, very high, which in any case is high in India. So then the equity markets will have their last laugh.
Okay, let me talk about a more immediate laugh. Yeah. I remember in 2009 we were both together in the US, and people were asking you, and this was at the bottom of the cycle, and people were asking you about the equity markets, and you resoundingly said invest in India. Markets shot up after that.
Yeah.
Would you say that with the same confidence today, or are you a little more worried?
Beyond doubt. Now at this 12-13 P multiple and the kind of pessimism I see, I don't have any doubts. I mean, it may take 6 months, 8 months, 12 months, I don't know. We might see some more 10%, 20% down. But this is a time, I mean, I'm just short of saying that bet the house. You know, in the sense that clearly, I mean, I don't have any doubts that you'll make much better return than what you have made in recent times, because now the valuations are very, very reasonable.
How do you divide your work, because you carry the firm carries your brand, your name. The visible face is Raamdeo. I mean, he's more often on TV than you are. You keep slightly reticent to this thing. How do you divide the work between the two of you?
I think it's based on the natural kind of liking and strengths. I think when we started, he used to handle the client's relationship and I used to handle the operations and the trading part. So as and when we kept on evolving ourselves, wherever natural talent was there and wherever strengths were there, we kept on building on that. So maybe I manage the brand, I manage the HR, most of the operations I manage, and I really take care of 1 or 2 large businesses like retail and wealth management, and he take care of his passion, which is research and asset management. So I think the businesses are divided based on the natural flair and kind of strengths.
Finally, are you as optimistic as Raamdeo? Because Raamdeo, we know, is always optimistic.
Yeah.
Even he makes optimists like me look like a pessimist. Are you as optimistic?
No. Yes, I think at these levels, I would say that the odds are in favor of the bulls rather than the bears, because I think we have seen 4-5 years earning growth has happened from 1 trillion to 2 trillion. It has happened, and the markets are at the same level. So I think it's much more attractive level, and the money is made when you invest in bad markets.
Okay. Gentlemen, thank you so much for joining us, and wish you all the best for the next 25 years. Thank you so much.
Thank you, our pleasure.
Thank you.